man, important one today because I'm going to be sharing the 5 top trading indicators which have made me millions in crypto. This has been a much requested video. I'm going to be diving into which indicators I cannot live without. Smash some likes, don't forget to subscribe. Remember, trading is very, very risky. It's not made for everybody. And if you do so, practice with a little bit of money. If you're looking for an exchange, you can buy or trade crypto using Bybit in the link in the description. That is an affiliate link which supports the channel. Guys, we're going to get straight into this one. And the first indicator I cannot live without is the RSI. Yes, this gives you an indicator of whether a certain crypto or project is overbought or oversold. Now again, we're not going to get into the nitty-gritties of every single indicator in this video, otherwise this video would be over half an hour long and super boring for you guys. But if you are interested, ijaz.uk/TA is a completely free TA course where all of these indicators and a whole bunch more are broken down into detail, including exactly how to use them with profitable trades. Now, when you go into this red zone very quickly, that means you are now overbought. That normally means the bulls are running out of steam and you could expect a correction to the downside. The opposite of that is when you come into this green territory at the bottom. If you fall into the green territory, that normally indicates a good opportunity to buy because now the price is oversold. In other words, the bears could now be losing steam. So the RSI is definitely an indicator I cannot live without. The next one we're going to be looking at is something called the Bollinger Band. And the Bollinger Band is an interesting one. Not a lot of people use this. I learned this from traditional finance back in the day when I was trading at an investment bank for stocks and derivatives and equities and the rest of it. And this was one that was often used. And I love this Bollinger Band because it gives you a broad structure of the price movements. Now, within any given time frame, you can expect the price action to behave according to the upper and lower bounds, these two yellow lines on the Bollinger Band. And generally the rule of thumb that you would look to do, and I've made a video on this exact strategy which has made me so much money, and I've broken it down to how you guys can make $100 a day off the bat using this strategy. If you applied yourself and you were focused on doing it, you can do that. I'll leave the link to that video here for you guys to watch. But the premise is, you tie this in with another indicator, and you want to be trading this on the entry from the bottom of the Bollinger Band and trading it to the top. And if you can start getting really good at doing that, you can see here how on spot, this starts to make you some really good returns here. For example, here on Bitcoin, I know this is the weekly chart, but you could have made 131% here spot. And there's many examples of how you could do this on the hourly time frame, the 4-hourly time frame, depending on what suits you. But the premise is the same. You tie this in with another indicator. That is what's called confluence, when two indicators, by the way, show you the same picture to enter a trade or to get out of a trade. That's called confluence. We go through that in the TA course, but that's something you want to be adding to your toolkit as well. Definitely the Bollinger Band. Now, the other thing I do want to share with you on the Bollinger Band is you do have the center line. So sometimes this does just obey the center line. For example, here on the weekly chart on Bitcoin, maybe it won't want to come all the way down here to the bottom of the Bollinger Band. That'll be painful. But it's more likely that it could come to retrace and pull back into the middle of the Bollinger Band. So that's something sometimes you can use, like you've seen here, hit the top band, came into the bottom, and then it bounced back up to the top, okay? So that's something you want to watch for on the Bollinger Band. So definitely one I always keep on my trading view charts locked and loaded, and I always check in on it frequently. Next up, your good old exponential moving average. Yes, again, we go through this in detail on how this is calculated, how you use it, but the premise of it is, it smooths out the trend. When you look at a chart like this, for example, we're using Bitcoin here on the weekly chart, all these candlesticks give you erratic movements. As a trader, you want to be able to time your entries in and out. And sometimes it benefits you just to smooth out the trend. So for example, here on the chart, I have a 50 moving average, which turns the candlesticks by averaging the last 50 candles, right? And then using an exponential formula. Now, if I wanted to then apply the 200 moving average, that gives me even more smoothing. Now it's taking 200 candlesticks to give me a data point on this moving average. And there are so many strategies you can use, including a crossover strategy, which really does give you a great indicator to buy. And what you're looking for is when the short-term exponential moving average crosses above the longer term exponential moving average, okay? And that's when it then indicates that this could be a good entry for a trade. So if I show you this on the daily chart, you can see here the small, the white 50 period moving average crossed over the yellow 200 period moving average, which normally indicates a nice entry for a buy. Had you have taken this price point here on Bitcoin, you could have benefited to the peak there of a trade on 44% on the daily chart on Bitcoin. Just a nice simple example of a move to the upside using the exponential moving average. So this is definitely a lovely indicator for you to use, particularly if you're a beginner. Very nice, simple strategy for you to use. Wait for a crossover, enter a trade with a tight stop loss and have a take profit, and you're good to go. Okay, so indicator number 4 takes the previous one, which is your exponential moving average, and puts that on steroids. And if you guys have been watching my channel, you guys will know that this is one of the tools I love to use the most. And again, get into that TA course, ijaz.uk/TA, and I share all my secrets on how to add this to your chart, because some people don't even know how to add this to their chart, how to add it to your chart, how to start using it, and this will really change your game, not just in terms of trading, but also in terms of long-term investing as well. This completely changes how you see the market, the structure of the market, and you'll see me using this in my day-to-day TA update videos as well. So definitely get yourself locked and loaded on the exponential moving average ribbon, the EMA ribbon, as you'll hear me refer to it. Now, what is this? Well, all the EMA ribbon is a combination of a lot of different moving averages, exponential moving averages, right? So the EMA ribbons I showed you before, I used the example 50 and 200. Well, this uses a load, right? It starts off with the 200 one here at the blue line, and then it uses various other ones working its way all the way down to even 20 moving averages, 20 period moving averages. And so when you get all of these, you get a ribbon which shows you the smoothing of the price action. And it really does act as amazing support and resistance. And if you go back into the price action, you can see so many times where the EMA ribbon acts as support. Just like a single EMA line, a single line like we went through previously, can act as support and resistance, so can the ribbon. It's even more powerful. Okay, so you can see here how it's acting as resistance to reject the price. You can see here how it acts as support to bounce the price. So many different examples of how you can use the EMA ribbon effectively, not just to tell you whether the price is likely to bounce, but also where, right? So for example, when this price action was at 31,000 on Bitcoin, I made a video saying, guys, this could easily pull back into that 25 to 27K region. Sure enough, it has done that, right? Why did I know that? Because I expected it to come into the EMA ribbon. It can't remain too extended away from the EMA ribbon indefinitely. It's got to get a pull back into there. And that is another tool to add to your belt, the EMA ribbon. Definitely get that. Ijaz.uk/TA. Learn how to get it set up. Learn how I actually use it day to day to make me hundreds and thousands of dollars in the crypto market. All right, indicator number 4, and you're probably not going to guess this one, and I'm going to give you another bonus one over this for you guys sticking to the end of this video. But the most important indicator, which so many people overlook, is your good old volume indicator. I don't know why so many people overlook this, or even if they do have it on their charts, they kind of just ignore it as if it doesn't mean anything. Volume is a very serious indicator which you need to learn how to keep on your side. Whether you're an amateur trader, whether you're an experienced trader, if you haven't learned how volume can give you clues, you're missing out. For example, look at this Bitcoin price. This is just literally what the Bitcoin price has been doing over the last couple of days. You've got the price moving upwards here on Bitcoin, right, over the last period of time. What do you notice with the volume? Volume was moving downwards. This is called volume divergence. This is where the volume is not backing up the move that we've seen on Bitcoin, which normally suggests that the bulls are running out of steam on this move. So that, along with the EMA ribbon that I just showed you, has told us that Bitcoin was likely to pull back, and you would have expected this pullback to happen on Bitcoin. You wouldn't have got caught off guard and liquidated from your trades like so many other people have been over the last few days. So definitely make sure you've got the volume indicator on your trading view charts. Make sure you're looking at it. Make sure that when you're taking a breakout trade, for example, or you're waiting for your exponential moving averages to cross like I showed you on the third indicator that I use, you make sure that's backed up with volume. A breakout without volume, or a trade you're entering without volume, is not going to work. You need to make sure volume is always on your side. Keep this with you. I mean, look at this move to the upside. It's accompanied by volume, okay? It needs to be accompanied by volume. Look at this move to the upside. There was not much volume there, and that is why you saw the price reverse at this point, because there was no volume backing up the last move here up towards 31,000 on Bitcoin. So volume, do not overlook it. Make sure you've mastered it before you start moving to some of the more advanced indicators. And as promised, the final bonus indicator, and again, another one which you probably haven't thought about as an indicator, and that is the price action. The candlesticks on the chart are the most important indicator you have as a crypto trader. If you just gave me those candlesticks, what's on this chart now? In fact, let's just take off even if we didn't have the RSI, okay? So no RSI, I have volume, and I have the price indicators. I can still make thousands and thousands of dollars using these two trading, and you should be able to too. right? The indicators are there to give you confluence. It's to back up your stories, to make you more confident and to stack the probabilities in your favor of a trade. But a good trader can tell a story just from the candlesticks, just from the price action, and then the volume gives you that final confirmation to say, okay, what I'm seeing here in this story is being corroborated by the volume, and it's not a trap where it's moving up to the upside without any significant volume. With those two, there are many experienced traders that can do really well with just those two, and that's important that you master these two indicators before anything else. Again, if you work through the TA course, ijaz.uk/TA, I go into detail about how every single one of these candlesticks on this chart right now is telling you a story. And if you're not understanding that story, you're missing out on an opportunity to make some really, really remarkable profits here in crypto trading. But you need to understand, what is a doji candle? You know, why is this candle significant? What does it tell me about the price action? What's a dragonfly candle? What's a bullish engulfing candle? And we go through all of that in detail in a structured curriculum. And I don't know anybody that has given out a free TA course where I've learned all of this stuff from traditional finance for free. So guys, those are my 5 critical indicators which I cannot live without. This is like a GQ episode, right? But without trainers and stuff, just crypto indicators because we're saddos. So RSI, Bollinger Band, EMA ribbons, EMA on their own, volume, and of course those pricing candles. Let me know if this video was useful. Hopefully you guys appreciate it. Smash up likes, don't forget to subscribe. Go watch this video here for an exact strategy on how to use 2 indicators to create an actual trading plan which can start delivering you $100 ASAP. Thanks for watching guys, and I'll see you in that one.